It's been a tough year for U.S. crypto companies. They're asking for clear rules, but what they're getting are enforcement actions. Now some are considering leaving the United States altogether. Meanwhile, the U.S. government is pushing their own digital currency and getting pushed back from the industry, but also from federal and state officials. Our next guest is Aaron Kaplan. Aaron is founder and co-CEO of Prometheum, a digital securities platform regulated by the SEC and FINRA. He's also counsel at Gusray Kaplan Nussbaum, so he's the perfect person to help us understand all the legal and regulatory issues here. Aaron, so great to have you with us today.
Thank you for having me, Ernest.
So we've got lots to cover. We heard this morning about a new Department of Justice crackdown. Their new crypto SAR will be looking to crack down on exchanges and other companies that enable money laundering. We also had Florida Governor Ron DeSantis sign his CBDC ban bill into law last Friday. But first, you actually run a regulated digital securities platform in the United States. So can you give me a sense of how you guys have operated in this environment over the last couple of years?
I think the SEC has really laid out frameworks for the trading and custody of digital assets and how to be compliant under the securities laws. For a long time, the industry argued that there was a lack of regulatory clarity because none of those frameworks really none of those actual approaches really complied with the frameworks the SEC laid out. But what we're seeing overall is a twofold transition. One is away from state licenses, and two is away from the existing sort of virtual currency models towards more of a ecosystem that's regulated on the federal level and it's basically compliant under the federal securities laws.
Okay, so what you're saying is that it's been no problem for you. You've had the clarity you needed to operate legally under U.S. financial laws and to grow, and you haven't been worried about violating or getting some sort of an announcement from the regulators saying that you're doing it wrong. As far as you're concerned, this has been clear enough for people who are acting in good faith.
The point needs to be made that we are in the process of going live. So we haven't been able to actually trade or custody under the securities laws yet, but that's what we anticipate being able to do in the very near future as we have complied with those frameworks. And what we see is that a lot of the trading and custody activity is going to have to migrate to ecosystems that are compliant under the federal securities laws, which is what we believe we've built. Okay,
so let's talk a little bit about examples like Coinbase and Kraken. So they've said they've been on the receiving end of Wells notices. They've been on both sides of lawsuits, the SEC versus Coinbase, also Coinbase versus the SEC now. Now, what are they doing wrong? Maybe that's not the right way to ask it. What do you make of their complaints that the SEC is actually not giving them what they need to operate? Is it that their business model is too different or is operating in a gray area? Or is it that they are deliberately placing themselves in an area where they can continue to do activities that may not be compliant?
The difficulty with the legacy virtual currency or crypto institutions is twofold. One, they don't have the proper licenses to operate under the securities laws. And two, their technology is arguably obsolete because it's not meant to sort of be to process or to handle or to trade or custody crypto as securities. So you need arguably a big or a complete rebuild of the technology, plus to obtain the proper securities licenses in order for them to be compliant under the securities laws. And I think that's a major task. And that's why we see such hesitancy and basically such a fervor in their opposition to understanding that this federal securities laws apply.
Okay, so a real foundation of their arguments is that the United States has not made a final decision about whether we have a wide range of digital assets, and we have some, people have argued that some are securities, some are not. People have argued that the CFTC should be the primary regulator. Others say the SEC. The SEC is certainly acting as the primary regulator these days. Do you think that Coinbase and Kraken, companies like that, are essentially hedging their bets and hoping that the CFTC becomes the regulator and they're kind of waiting out the SEC? Or do you really believe that ultimately the SEC will be the primary regulator? They will be treated as securities, these assets, and ultimately everything, they're going to have to take that step and be regulated under securities laws?
I firmly believe that the overwhelming majority of digital assets, as Chairman Gensler has suggested, are securities, and that the federal securities laws are the best framework to regulate digital asset, and the SEC is the best agency to enforce those regulations. I think that anyone who sort of argues to the contrary has a vested interest in their own business activities as opposed to what's really best to protect investors and ensure fair and orderly markets and really ensure that customers' assets are properly segregated and secured.
Okay, so you're building under the assumptions that the SEC will be the primary regulator and securities laws will apply. So what you're saying is essentially that the companies that built up their business activities, built up their business model before this became clear, to the degree it is clear, that they're just pushing it as far as they can before SEC regulations kick in or before that clarity comes, and that clarity will be obliging them to do what you're essentially doing in the first place. Is that correct?
Correct. The previous paradigm, I would argue the pre-FTX paradigm, was arguably a hall pass for a lot of people in the industry who were providing financial services without providing these sort of proper investor protections attended to those financial services. After FTX happened, the paradigm switched hardcore to basically being a new securities regulation paradigm that's meant to protect investors. It's meant to ensure that trading has proper integrity, fair and orderly markets. It's also meant to ensure that customers' assets are properly segregated from that of the institution. And all of these things are requirements under the federal securities law. So there's really no need to recreate the wheel. It's the best way forward, and it applies because federal securities laws always really applied to the industry. It was just this, the debacle of FTX that sort of forced the issue forward, arguably by bait and possibly like 18 to 24 months.
Okay. So as far as you're concerned, this was already in the pipeline, and FTX makes it a little bit more urgent, but this was always going to be the way forward. That's very interesting. So companies like Coinbase have threatened to leave. Other younger companies have threatened to move as well. What do you make of these? I don't know if you'd call them threats, but what do you think about these claims that they could actually up and leave the U.S. market if these types of regulatory actions continue, or if the SEC ultimately becomes or continues to act as the primary regulator?
I think it's difficult for any company that generates the primary proportion of their business from the United States to up and leave the United States. I think that hopefully there will be a solution as some sort of middle path forward. But if not, the companies that don't evolve and comply with the federal securities laws will perish. Okay.
Now, another interesting thing on the SEC front is some of the dissent coming from within the SEC itself. So we have Hester Pierce, Commissioner Hester Pierce. She is a lawyer as well. That's her background. And she's been very critical very quickly. Each time Gary Gensler has an announcement or makes a statement, or often when he takes an enforcement action, she comes right out and dissects it and says, this is bad law, this is bad policy, things are not clear, we are tamping down the growth of the industry. What do you make of her arguments from a legal perspective and also from an industry perspective?
Obviously, there's a place in theory for some of those arguments, in that the goal of them is to provide some sort of solution towards a compliant ecosystem. But I think sometimes they are more based in new concepts as opposed to legal precedent, and that makes it makes it a little more difficult to follow. I also think that while the argument that in the responses to the change to the definition of an exchange and reopening that release, that innovation is kaput, is abstractly, I can understand where it's coming from, but at the same time, you have to look at the other side. The industry was basically had so much unbridled innovation. There was no regulations to sort of prevent any sort of malfeasance, and we led to a situation where retail investors were harmed. And as the SEC has said, their main client is the investing public, and those people were harmed in the process. And now there has to be systems in place to protect those people.
Right. Okay, now speaking of legal precedents, one of the much awaited decisions that's been in the pipeline for ages, and we could be getting it in the next few months, is the SEC versus Ripple decision. What do you think will be the implications? Because we still are in the US in an environment where there isn't this clear structure of regulation that the entire political apparatus has gotten behind. We have differences of opinion in Congress, differences of opinion among regulators. So how important is the Ripple decision? Can you explain a little bit what the Ripple decision is and what the potential implications could be in terms of setting a precedent for the crypto industry?
So I believe that the allegations against Ripple is that XRP was sold as an unregistered security, as it basically did not go through the proper registration process in order to be able to offer the actual security, meaning XRP, to the public. The way it works is if you're generally offering a security to the public, it has to go through a registration or maybe a Reg A plus exemption, and neither one were taken there. So the argument is that it was an unregistered security and therefore in violation of the law. In that context, the industry has considered on different elements the implications of whether XRP is determined a security for other cryptocurrencies, as what would then be the implications and the knock-on effect from there. Now, what we've seen so far with the library case with an LBC token, which I believe was a New Hampshire district court that laid out a decision that basically said the LBC token was a security, and it followed a very similar fact pattern to what I would say is the Ripple XRP relationship. So I think that the industry is pretty much aware that the writing is most likely on the wall, in the sense that there's a very high chance that XRP will be declared a security, and we'll see how it plays out from there. If that is declared, I think some people would argue that that's the precedent that a lot of these other tokens, these smart contract-based network tokens, so everything basically besides for Bitcoin is a security, and therefore it has a significant ripple effect, if I want to be poetic. Right.
Okay, well, that makes sense, and but we've heard so much optimism from some industry players saying, "Oh, it's things are looking good based on this decision, that decision, based on this opinion." We're expecting the judge to come down on the side of Ripple. You don't think that's likely to happen?
No, I also think that often the individuals who are positing those thoughts have vested interest in Ripple being declared, or XRP being declared a non-security,
or their own tokens being declared not securities by extension. All right. Now let's looking a little bit more at the U.S. regulatory front. We saw stablecoin legislation come down a few weeks ago, and it also included a provision for the United States government to further their exploration of CBDCs, so central bank digital currencies, the idea of a digital dollar. What are your thoughts on a US CBDC? Speaking from the perspective, again, as an industry player, as someone who's going to be operating in the cryptocurrency environment, what do you think about the potential for a US CBDC?
So I think one of the things that occurs, and it's not the exact response to your question, is that there's a confusion on the legislative level between a CBDC and a stablecoin. And people sort of, they tie those issues together. On the stablecoin level, I think that, possibly presenting a pathway forward, particularly on the federal level, where an issuer can properly register and issue a stablecoin, as long as it's not algorithmic, that could be a possible path forward. Now, on the CBDC level, I think there's a lot of concerns when it comes to privacy and sort of individual rights that would have to be overcome in certain states. And also on the other side, there would have to be the ability to properly track those transactions, basically not allow a zero knowledge proof. So I don't know if that balance could be achieved. I don't necessarily think that the US has to be the leader when it comes to CBDCs. I think that that's a lot of sort of hype that people have put forward as to this transition to digital money that's occurring. But really, money is digital in a lot of capacities. It's just not crypto based. So I don't know what will happen with this CBDC going forward, but I don't think in the very near future we will see the U.S. using a CBDC in any sort of significant capacity.
Right, because in order for the U.S. to have a CBDC, it has to be legal tender in all 50 states. And if states have the power, like Florida's legislation, which presumably is open to challenge at the federal level, but Florida passing a bill essentially banning the use of CBDCs in the state of Florida, U.S. and foreign CBDCs. So that's a pretty firm line in the sand. And we've seen pushback from states like Texas as well. So I guess if the states have the ability to make a fuss, whether they ultimately win or not, that's enough to really hold back the development and the rollout of at least a retail CBDC, a CBDC aimed at consumers and aimed at general commerce in the near future. Is that your feeling?
Yeah, in some capacity. Obviously, it's sort of backwards. I think there's been previous sort of history in the United States where states have issued their own currency, which is obviously not allowed given the supremacy clause, et cetera. But now we're sort of seeing the opposite. If there's a federal currency issued, but it can't be used in that state. So how does that play out as time goes on? But at the same time, I don't necessarily think, unless there's a killer use case that I'm not seeing, that there is necessarily a need for a CBDC in the United States at this current time.
Right. Now thinking again, putting on your lawyer hat, this was a stablecoin bill, and tacked on to the end, as you said, stablecoins and CBDCs are very, very different. The issuer is different. Their use, the use case, the argument for their existence in the first place is quite different. And you could argue that in the environment where a CBDC becomes used, why would you need stablecoins? If you have a US CBDC, then why would you need US dollar stablecoins? What do you think of the addition of CBDC clauses at the end of that stablecoin bill? Because I ask because the arguments that have been made in Florida and some of the other states they're arguing that the Uniform Commercial Code amendments, which are now before at least 20 states, and this was one of the big red flags that Florida reacted to, and some other states as well. They would limit crypto. They would limit the definition of what constitutes money, essentially excluding cryptocurrencies, but creating an exception for CBDCs. And that's where a lot of this is happening. So, do you see an attempt on the part of the federal government to use legislation and existing laws or bills to create openings for CBDC without coming right out and saying, this is a pro CBDC initiative, or these updates to the UCC are in order to enable a CBDC in the United States, a digital dollar. What do you think about the U.S. strategy in these two areas, the stablecoin bill and also UCC amendments and updates?
I think that the more pressing issue is on the stablecoin side, as there's more systemic risk if there's stablecoins being introduced and they're being used in different sort of ecosystems as some sort of, digital cash equivalent. As we've seen, I think the entire sort of crypto winter in this instance was started with Lunaterra, and then everything sort of played out and sort of, had a knock-on effect from there. And that's why I think that stablecoins came into such focus in the first place. A CBDC issue, I think, can be dealt with over a longer period of time because it's more of a larger national security consideration. Obviously, there's systemic risk to stablecoins, but there's more of a national security implication consideration sort of that really needs to be explored in much depth. And there needs to be significant attention and communities really exploring the potential benefits and also whether it actually makes sense. I think that we'll see that play out over a longer period of time, but we're more likely to see action from a regulatory standpoint when it comes to the stablecoin side, because those pose more of the current systemic risk because the CBDC doesn't exist to our, the crypto ecosystem and potentially the banking ecosystem. And when you look at what the SEC has done, is I think they went after a lot of the different areas within crypto that sort of introduced that systemic risk. Now, first you had lending, then you have staking, then you have, stable coins with BUSD, I believe it was, and then you have trading for et cetera, custody. But I think that everyone on the regulatory side does understand that there's potential issues and potential risk inherent to using stablecoins as the cash side of any sort of transaction, and therefore it has to be properly regulated.
All right. Now, just before we go, I wanted to get your thoughts on the EU and UK regulatory approaches. So the EU has essentially passed MiCA, their overarching framework for cryptocurrencies. It should be approved by the EU finance ministers this week. And we've seen the UK move forward specifically with stablecoins, clearly defining stablecoins and putting down some, you could say, some foundational elements for how crypto would be regulated in the UK. What are your thoughts on those, and to what degree could those contribute to the regulatory environment in the United States?
Well, I think that while MiCA is a positive step forward for the EU as a whole, the reality is it doesn't go into effect until July 2024, possibly at earliest. So you have the adoption, but there's still a time period before it goes into effect. And I think that there's already discussions about a MiCA 2 that might be necessary to deal with certain elements that MiCA did not. So Europe, while making progress, I still think has a long way to go. On the UK side with the FCA, I think they'll be able to be more nimble and move obviously a little bit more efficiently because they're one sort of, the UK, it's a group of countries, but essentially they're a group that's much smaller than the EU, and therefore they can implement sort of whatever changes and sort of policies and regulations they're looking to do in a much more efficient and quicker sense.
And do you see anything useful in either MiCA or the provisional moves that we've seen out of the UK? Anything that could apply or could contribute to the United States?
I think that while each country has to meet their own needs, the US will arguably be most likely to provide the regulatory frameworks that other countries and other sort of nations will adopt. I think what we've seen is clarity from the SEC in regards to the overwhelming majority of digital assets or securities. The intermediaries providing those financial services need to be registered under the securities laws, and those assets need to be custodied in a way that complies with securities laws. So in my opinion, the US has a proper framework. They're implementing that framework, and we're seeing that transition right now away from sort of the legacy crypto financial services and ecosystem to one regulated under the securities laws. And that will be the regulatory clarity that everyone says doesn't exist, but really does in the United States. And that's what other countries will follow as well.
Very interesting. So you're really seeing that if and when we get the finality of clarity in the United States, that's what other countries are going to be following. So these moves by jurisdictions like the EU and the UK are more or less placeholders. You believe that when the US fully commits to and fully articulates a crypto regime, it will become the crypto regime that other countries emulate around the world?
I think it's already fully articulated. It's just that the transition's occurring now.
All right. Well, thank you so much for your time today, Aaron. This has been fascinating. Lots of very original views that we haven't heard or read anywhere else. So I really appreciate you taking the time.
Thank you, Ernest. I appreciate your time.
You're watching Kitco News. I'm Ernest Hoffman. Keep it here for more coverage of critical market moves, and don't forget to subscribe.